Hi everyone, I'm Chia. Welcome to my Cybercode special. I'm a wealth manager working in Philly Capital for more than 13 years. As well as just being a wealth manager, I'm also a trainer for IBF accredited course called Making Investment Work. Today, I want to use this opportunity to share with you to talk about this topic about COVID-19 second wave. So what is this COVID-19 second wave? In the papers for the past 1 month plus, everybody are talking about it. Especially on the 2nd August, being reported in Straits Times, there is a record spike of nearly more than 300,000 new infection globally. And WHO director has warned that the effect of the crisis will be felt for decades. So the key questions that I would like to ask and maybe food for thought for everyone will be, are we in the second wave, especially in Singapore context? And the next question is, what will be the economic impact like what the WHO director has said? If it's going to be felt for decades, this is something very important, especially for us as an investor in the stock market. So I'd like to share with you my personal opinion on what will be the economic impact will be like. Recently, on the 11th August, Singapore MTI has shared that the Singapore economy has plunged by 13.2% in second quarter. With this figure, it's very clearly to know that the circuit breaker that the Singapore government has implemented during the months has economic impact. If the second wave is to come again, there will likely to be a second circuit breaker to happen. So I would like to share with you also on the very similar day on 11 August, Mr. Chan, Minister of Trade and Finance, he has shared his opinion.
We have just heard our second quarter GDP figures. To put things in context, this is our worst quarterly performance on record. The forecast for 2020 essentially means the growth generated over the past 2 to 3 years will be negated. The numbers reflect the impact of COVID-19 as well as deeper forces reshaping the global economy and our position in the global value chains.
You see, Mr. Chan here shared that, wow, the economic numbers that is shown on 11 August, the drop of 13% is as equivalent to 2 to 3 years worth of economic growth. Just one circuit breaker has caused so much economic contraction, meaning the drop in our economic activity. So that is a very deep impact and very big impact for just only the few months of a circuit breaker that we have experienced. So what are the sectors that has been impacted by this circuit breaker? I think there is a very clear thing to see that the retail sales, there is a big slump if you go into look into details of the report by MTI. So on 4th April, MTI has reported that the retail sales had dropped by 8.6% in the first quarter of this year. This is a 4th April report, and this is the number that is shown. And in this number, you will see clearly there is a big drop in departmental store numbers. There's a big drop in food and alcohol. There's a big drop in watches and jewelry. These are very clear indications that people are doing lesser of shopping, going out for retail therapy. But there's an increment. The increment numbers are actually coming from supermarket and hypermarket. Of course, this is no surprise because when the first quarter when it happened, you will hear a lot of news about people rushing to supermarkets to buy groceries, and interestingly, they will want to buy toilet paper. So these are the numbers in the first quarter of this year. But what is more important is that I want to share with you the impact of the circuit breaker. Because if the second wave came in again, the circuit breaker impact will affect more economic numbers, especially the retail numbers. So in the recent 6th of August recently, it's been reported that the retail sales in June, there is a bigger increase in sales in the supermarket and the hypermarkets from a percentage of 15% has went up to 40%. This is a clear proof that if circuit breaker is going, the second circuit breaker, if it come in, there will be definitely more people will be eating in, doing their own cooking at home. So supermarket and hypermarkets will definitely have an advantage. But what is going to be impacted, you will be looking at food and alcohol. It has been staying around 40%. Even in the circuit breaker period, it seems that there isn't much impact in the food and alcohol because with the delivery service, Food Panda, Grab Food coming in is really helping a lot of restaurants dealing with food. And in terms of other numbers, like for example, computer and telecommunication equipment, you will see there is an increase of 20%. Comparing to the first quarter, there is a big drop. Why is there an increment? I think it's obvious because people will be working from home or the students are going to do home-based learning. So this is a very interesting figure to look at. The demand for computer telecommunication equipment is going to increase. And in terms of departmental stores, this is one of the greatest hit. Departmental stores has dropped by 30 over percent, okay, with just the circuit breaker coming in. Similarly, in terms of watches and jewelry, these are very obvious signs. Anything, when the circuit breaker comes in again, if there is a second wave, the impact for the retail numbers is going to be greater comparing to what has happened in the first half of this year. But what is interesting is that the Department of Statistics also share the month-to-month change, because in the month of June, comparing the month of May to June, the circuit breaker was being lifted off and Singapore went into phase 2. And it is interesting to see there is a drop in supermarket numbers, okay? And even convenience store, there is a drop. People now buy things from supermarkets slightly lesser, just 1 month figure, but there's a big increment, especially in departmental stores, 300. This is very clear that a lot of people, after when it come to phase 2 period, everybody rush to go out and rush to do their retail therapy. And it's very obvious, you will see that watches and jewelry, wow, all these are signs of clear improvement in retail therapy. So if the second wave does not impact Singapore anymore, and if things are looking good, definitely there will be improvement in retail sales number going forward. Retailers will get the opportunity to recover back to what they have been doing. And what has caused the retail sales to be slumping definitely is the tourism industry, the tourism coming into Singapore. And recently, SIA has also reported our earnings. They have been record losses. And why? Because the planes are not flying. And more importantly, with planes not flying, there won't be tourists coming into Singapore. And what if you want our tourism industry to be back to normal? How long will it be? So IATA recently, International Air Transport Association recently also shared their opinion. They think that until year 2024, which means it's 4 years later, then the air passengers numbers will revert back to the pre-COVID-19 level. Wow, that is really a very long time. But thankfully, for the past few weeks, the government also has slightly lax on the airline, and they allow some routes to those New Zealand routes to some countries that is very low in COVID-19 numbers. So there is some slight recovery in terms of the airline industry, in terms of the possibility of more tourists coming into Singapore. But what's the main concern? It's not just the retail sales number and also the tourism number that I'm very concerned about. I'm more concerned about the overall economic situation of Singapore. One of the measurement of overall economic situation of Singapore is the employment numbers. SIA Airlines, they have been very clear since day one when they reduced the number of flights. They will have already expected that there will be job cuts, especially in SIA. They are very good. They still continue to say, okay, we will only cut the salary of the staff by 10% and allow those who want to retire early to retire. But we also see some reports like RWS, who do hotel and also entertainment. They have to retrench staff to cope with the current lockdown, okay, lockdown in tourism. and they have to lay off staff. And their results also didn't turn out very well, and therefore they end up didn't pay any dividend. But going forward, what I'm actually watching out for is actually the entertainment industry, like for example, the bars, bar joints, the discotheques, dance club, or even karaoke. And we also have heard about karaoke joints, famous karaoke joint like Teo Heng has also closed down some of their outlets, more than half of the outlets they have. Now, this is really very important because when all this industry does not make money, they have to close down their business. So how long can they survive for this kind of business? Based on this statistical number, is less than 3 months. 42% of them say that they can only survive less than 3 months. So if within these 3 months, which this report came out from August the 9th, if within these 3 months they are unable to recover, if government doesn't allow all these bar joints or karaoke joints to operate, they may see more of their business closing down. And this will lead to unemployment. There will be a great numbers of unemployment in Singapore going forward if this continues, if this tourism industry is not going to open up going forward. So experts have said that the worst have not come. This article came out in 30th July. And of course, this sets an expectation for me that, wow, okay, deeper impact is going to come going forward. And based on the recent report by the labor numbers, the unemployment rate in current situation is that it is at the highest in the decade. Okay, labor market has dropped very drastically. You will see the numbers is now going into negative, means that there is a lot of retrenchment. A lot of people are out of job, which Q2 hits a number of 121,000 worth of job that's been lost. And in terms of retrenchment, there's a retrenchment of more than 6,000 plus. So this is really very clear sign that this COVID-19 has, especially the circuit breaker period, has caused a lot of businesses not to be able to function at their full capacity. And more importantly, what is going to be expected is that the jobless rate numbers coming from the recent quarter is also showing an incline, and we are going to expect the numbers are going higher and higher. And especially when we look into the numbers of Singaporeans and also Singapore residents, the increment has go up to 4%. Usually Singapore will not be at a very high unemployment numbers. It's only usually during the crisis period, then you will see a very high unemployment numbers. So based on what this chart has been given, you will see that in crisis period, chances is that the unemployment rate can rise out from 4% to 6% range. And this is very definite and clear that we are facing a crisis right now. Okay, but the key question is that, is it really hopeless right now? Is it that our economy are going for the worst case scenario? Are we going to expect the stock market to be dropping more and more? But this is where I want to share with you, there is some signs of hope, some signs that the economy may recover, okay, or the economy may have a limited downside. The first sign I want to share with you is actually the export numbers. Recently, in the 11th August, same day when the agencies shared the GDP numbers of Singapore, the export figures actually was down 15%. It's very clear. But it's interesting to see a report is stated here, forecast adjusted upwards. When forecast is adjusted upwards, it means that there may be something that brings some light in the crisis period. So what is the thing that brings light in the crisis period? This is the numbers from Enterprise Singapore. It shows the non-oil domestic export figures. And under the sectors of electronics, there is an increment in export figure will grow by close to 10%. And these export figures from the electronic number, to me, there's no surprise because the retail sales, you will see that there's a lot of people rushing to buy the electronic components for working from home and also to do home-based learning. And what is more interesting is that the forecast is being adjusted upwards because there is better than expected performance for some specific product. So what are the specific product? Number one, non-monetary gold, okay, non-momentary gold, you will see that gold prices usually there's a big demand and gold hits historical high. Number two, pharmaceutical, this one, no questions. Definitely, there's more demand for more pharmaceutical equipments and even test kits and so on and so forth. And lastly, electronics. So these three are the three specific sectors. This is something that you may want to look at, that will give you some investment ideas going forward. And one of the key things that caused the rebound is actually the manufacturing numbers. It was actually quite surprising for me because in early this year, 4th April, the manufacturing numbers was being reported to be dropping very drastically, dropping to 445, an index of 45 level. And from the graph, you'll see that it's a big plunge, meaning the manufacturers are not confident, the purchasers, managers are not confident going forward to produce more things. But it's interesting to see that after a quarter, the numbers have actually increased quite drastically back to the normal level of around 50, the index of 50. It shows that going forward, the purchasing manager, they are actually quite optimistic in terms of manufacturing. They are optimistic in the numbers of the economy going to improve. That's why they are willing to purchase more things to prepare for recovery in manufacturing. And another interesting report by UMRO has reported this report on the 7th August. He said that the GDP for Singapore is going to set for a strong rebound. They are expecting that there may be a growth to 7%. Wow, that's a large number because the recent report for this year is very clearly is going to be on the negative side. Just now I shared is down by 10%. With a 7% growth, it means that Singapore economy may recover. Why? Here are some of the reasons, but I want to point out the main reason would be based on this word led by China. Okay, UMRO actually expect a U-shaped recovery that is led by China. But the key consideration to be able to receive this U-shaped recovery will be coming from whether the government will be able to withdraw any financial support to non-financial corporation and individuals who maintain the soundness of physical finance. It means that government must be prudent not to just pump money mindlessly into the economy, but they must be careful about pumping too much money. Because if the country government pumps too much money into the economy, it may cause inflation, or in fact, maybe may cause hyperinflation, which will set the whole recession tone to be worse off. So these are some key points for UMRO that I want to highlight to you guys. That's where I will start to be very watchful about the government policies that the government has been reporting. Mr. Chan has been speaking in the public press, and even Ministry of Manpower, Josephine Teo, she also has shared a lot of the future plan for Singapore. This is something that you may want to be more watchful during this period because it will give us confidence whether our market has recovered, whether we are going to do well as a whole in Singapore. And of course, there's risk, there's opportunities, there's also risk. The main risk that we are facing right now is actually the geopolitical risk that is between US and China. Of course, this TikTok has triggered another so-called war between US and China. This geopolitical risk is going to happen, more is going to happen because countries will want to protect their own country's economic situation. Another thing that Mr. Chan that has highlighted is that he has highlighted the change in business norm. So I'm going to share a little bit of the video clip of what Mr. Chan has said.
The second factor is the way global companies are reorganizing their production and supply chains. Companies are reviewing the need for regional hubs thanks to digital technology and ubiquitous communications. The second factor.
So what Mr. Chan has shared just now, he has shared that with this COVID-19 situation, it has changed a lot of ways that businesses are going to do their business. They are no longer looking at hubs, but they are looking at planting different units of business as diversified as possible. This can bring a lot of opportunities to Singapore, especially in the area of technology. I believe that in Singapore, a lot of us are very well skilled in using technology to produce services, to produce new creative ideas, and solutions for the whole world. Let me share with you the third thing that Mr. Chan has also shared.
The nature of tax and how it affects investment decisions have also changed. The US has already made a major tax overhaul. The nature of
So Mr. Chan also has highlighted global taxation. There's a make changes. US market has already, the US government has already made tax changes. But the key thing is that why does tax have an impact on a country's economy? Okay, it's actually an opportunity for Singapore because Singapore, we have been known as a tax haven. A lot of companies would like to come to Singapore and invest is because Singapore has one of the lowest corporate tax rate in the whole world. Going forward, in order for the countries to support the citizens, they have to increase tax so that they will be able to support them. So this means that there will be a lot of opportunities, foreign companies or even companies that they may want to expand outwards, they may want to come into Singapore to invest and expand. So this will definitely help us, Singapore as a whole, in terms of growing the economy. And now I would like to share the last thing that Mr. Chan has shared about social tension.
As the economic pie grows more slowly or contracts, it will cause more societal frictions and tensions between those who have more and those with less. As the economic
So Mr. Chan has shared that social tension is also one very key important point. Now the key, why do I think that this is a key important point is because if there is a difference between those who are rich and poor, and then during this situation, if those who are poor unable to get jobs and unable to feed themselves, there will be tension coming up. And this will cause unrest in the country. For Singapore, we have been known as a country which is politically stable, societically stable also. If there is a lot of unrest that has happened in our society, for example, in Asia context, like in Hong Kong, a lot of investors will actually avoid coming to Singapore to invest. If there's avoidance of coming to invest in Singapore, it means that there will be lesser business that is going to operate in Singapore. When there's lesser business going to operate in Singapore, then a lot of us will start losing our job because our unemployment figures are coming up. And when we have a lot of us losing our job, then we will spend less. When we are spending less, business will be earning lesser, and the spiral effect will happen. So I think these are the 4 important things that we need to really watch out for. What we need to watch out for, which is the last one, is the social tension that we need to watch out for. A lot of us, we must be very confident with our government. We must be confident of what the measures that is going to be implemented in this situation. So let us continue to work to manage our infection rate in Singapore. Because if the second wave comes, we need to really learn how to manage the second wave. If the second wave comes, there will be deeper economic impact. Whatever hopeful things that we can see going forward, it's not going to happen. So let us be prayerful that we will not have second wave. Let us also play a part to contribute to the economy, not just by contributing to the economy, but also to stay healthy and stay safe and in adherence to what the government has told us to do. But the key thing is that today, what I really want to share is that how do we navigate through this wave if a second wave is coming? The best way to navigate through the second wave is to be able to analyze the market situation. Like for the past 10 over minutes, whatever I share, this is the way I analyze the market situation by the method called fundamental analysis. And of course, we also need to look at technical analysis because technical analysis measures the market sentiment where the market is going. And through that, then we will be able to know what kind of stocks that we should be selecting to buy into our investment portfolio or what kind of stocks that we should be looking towards to sell. But to be successful in navigating through the wave, what is more important at the end of the day is about your portfolio strategy. How do you develop investment plan and how do you have a portfolio to ride through this wave? So now I'm going to share very quickly on how do I use technical analysis to help me to have understanding of what kind of strategies that I can adopt during this crisis period. One strategy I do is that I look at past patterns. I look at all the crises to see the patterns, the drop patterns, the rebound patterns, and the bottom pattern to identify whether there is a repeating pattern that is happening right now. Okay, so I'm going to share with you the bottom patterns that which is important to help me to identify whether our market is at bottom. Many people have said that the market has really bottomed, there's a V-shaped recovery, but to me, I think it's unlikely. Why? This is the pattern I'm going to show you. For all crisis bottom, you see there is a pattern forming that is very similar. There will be a W shape. A W shape is formed by two V shape. In 0708, the pattern also rebound. And even in 2018 and 2017 bottom, you see a W shape will also happen. It means that when I want to invest in stock market, instead of investing in the first V shape, I should be looking out for the second V shape. Now, let us look closely to the recent market. Do you realize that there is also a V shape that has been forming previously, that is formed early this year, and since March it has rebounded until May, and recently from May until now, the numbers have been dropping. So we may be in the formation of a W shape. So this is where I'm watching out for with a possibility in bottom. So the next thing, even if we know the possibility of bottom, the next question is that, Jay, what is the share that we'll be looking to buy? Based on fundamental, based on the industrial sector analysis, you will notice that actually the financial figures, the financial industry numbers are doing well. So you need to study the whole economic situation, then you'll be able to see which industry are doing well. So I noticed that the banking sector has been doing quite fairly well. So very quickly, I'm going to share with you how does the financial ratios of DBS Bank, UOB Bank, and OCBC Bank look like comparing to the past market bottom. You will see from DBS, what is very attractive right now for DBS is actually the dividend payout. But of course, because of MAS restriction, I do not expect them to pay by 5.4%. There will likely to be a reduction in dividend payout going forward. So DBS, based on the price of $20.85, may not, it is still attractive, but it's not at the level that is similar to the bottom. For UOB, UOB also shows a pretty attractive figure, especially in terms of P ratio 9.18. It's like at quite a close low level comparing to the past. And also in terms of book value, it's also quite a low value. It's just that the dividend yield may not be as attractive as what is showing in the past. And as OCBC, okay, so the numbers here in OCBC, the P ratio is not looking very attractive right now, but one of the worst off comparing to three banks. But what is really very attractive for OCBC is that the price to book ratio is actually less than what has happened in the past crisis bottom. So this is an attractive portion. So we'll see that these three banks, based on the ratios that I'll share with you, they are all looking at a very attractive level. This is something that I have been watching out for, and this is something that you may want to think about looking at it. So lastly, I want to share with you what Mr. Chan has said. Going forward, in terms of investing in the stock market, we really need to be very prudent, and we really need to know how to chart a new path. And let us hear what Mr. Chan has said.
This is not the Asian financial crisis or the global financial crisis where if we hunker down and things will improve in a few months. If we wait it out, we will likely be in worse shape than we are now. Therefore, we must chart a new direction now for a very different and uncertain future. We do not have all the answers yet, and the ground realities are fast evolving, often without precedence. But we know that staying still is not an option.
So like what Mr. Chan has said, really at this kind of situation, economic situation, the crisis, the COVID-19, even if whether the second wave is coming in or not, one thing we must do is that we should not be staying still. What I want to encourage everyone is that in this period, it's not just about understanding and finding whatever individual stock to buy. We need to be aware of the whole situation and be prudent and financially sound to be able to pick the right kind of shares to invest in to navigate through this crisis, to learn new things going forward. I think this is where I want to introduce to you making investment work. I've been conducting this course professionally to train a lot of professionals in the market, and a lot of them have understand what is the best way, a best analytical way to understand whole market situation to make the best investment decision. This is the best opportunity, this is the best situation to start learning, to start equipping ourselves with new knowledge. Please scan the QR code reader and you can find out more about my course. If you want to listen in to more of my YouTube session, please subscribe to Cybercode YouTube. Thank you.